Hello guys, so welcome to My Body Markets and you are with me Arpit Sharma, and here we are to improve your trading, to help you get a very good trading system of your own so that you can be profitable. In this particular live, you will see what kind of thing I'm talking about. How to be profitable is a key which everyone misses, and here I will show you a secret method. This is actually a secret method. Why I'm telling you this? Because you will never find a Fibonacci trading strategy like this, what I am showing here to you. So for this, what you have to do is be very open, because your brain is about to get reset. This is going to be your very important video which you cannot miss. And in this particular video, a particular Fibonacci tool which everyone shows, I will tell you how it can be used for a very big advantage in trading, because most of the people are using Fibonacci. But in using Fibonacci tool, you must also get how to understand the working of Fibonacci in a different way, in a unique way. Because the you know, conventional trading methods are actually designed by those people who are already having a trading system of their own. So they know how to make the things work. But if you are a beginner or you are not getting the results what you desire to, then in that particular case, your result is actually not up to the mark right now. But to make it up to the mark, you need to work harder on it to make your own trading system. Now, I will show you just now how that can be done, and you will be amazed, because I'm too sure that this particular kind of Fibonacci method you have never seen. Now, what should be a Fibonacci tool? You already know. I'm not going to waste any time on anything on that. Okay, so I am here to tell you how this particular tool has to be used. Okay, first thing first. So let's suppose, what is this market? I'm telling you from beginning. Okay, let's go. This is particular high, then a low, then a high, then a low, then a high. This particular kind of movement, we call it in a wave. Okay, that is a wave, that is a bullish wave, or you can say anything about it. But what my intention is, if you are having this particular scenario, now in this particular scenario, you need to be very careful about how you mark your Fibonacci, because the marking is an important thing. Now you can see that the Fibonacci tool will be available in here in TradingView, where you get all the tools and everything for drawing. And in Fib retracement, you can mark it on star mark so that it will be available on your favorites list, so you can directly use it from your screen if you enable this particular star mark here. If you disable it, your favorites toolbar will be gone. If you just click it, all the favorites will be coming on the hand so that you can use it directly on chart. You don't need to find it everywhere. So now this particular Fib retracement, how we will mark? We will mark from the starting of the wave to the ending of the wave, like this. But we will extend it to the future side. That means we will extend it till where the in future candles will come to this point. Okay, this is how I draw the Fibonacci tool, and how it has to be done I will tell you. Now this is actually my different setting of Fibonacci. I will just save that. Okay, save as sets, and I will actually load maybe some other settings if you have. Oh no, not this one, not this one, no. So okay, I will just apply this particular setting. This is actually the basic setting, but what I will do is I will now mark the levels what I want you to see. Okay, then 0.6, You need to change everything according to what I am telling you now. Okay, 0.8, 0.9, and then 1. These are the levels. Every 10% we will have a level. Now you can apply it. Okay, now we got it. So this particular time you have seen in Fibonacci tool what I am showing you. Now 0 is there, 0.5 is there. Okay, in 0.5 we will change the color so that it can be a little brighter. And in the 1 also we will just change the color so that it can appear a little brighter. Okay, now if we will use some background, then it will be kind of filled like this. So now this is all you need to have. This is the kind of setting of Fibonacci tool. What you need to do, take a screenshot, or you can save this video and watch it later also. You can save it also so that unique, I'm giving it a unique fib name so that I can directly click on it and this template will load all the settings right as we see now. Okay, so this is the thing, this is the setting of Fibonacci what we have to actually see, and this is very important that how you need to use it is the important key, and I'm going to tell you how you need to make it happen. Okay, to make it happen you just need to modify the way you think and listen and feel about the market. Now how? You must understand now why. See, if this is a bullish market, why you have marked this particular wave? This particular wave, because already this particular wave has actually broken the previous market high. This particular high is broken, so you can call it as break of structure, as most of the people in like this break of structure, because most of the people are now using SMC. So generally in SMC this is called a break of structure when a previous kind of high in the market is broken by a wave which is having a good momentum. Now this particular wave is actually a big wave. Now on the top of it, when it is starting to retrace, we have at that when it has marked the top and retraced about 20-25% here, we will mark it with the Fibonacci levels tool. We will be using it. Okay, now what happens, I am telling you now. Whenever suppose the wave is up to this height, you have started to mark the fib tool and now you are waiting for price to come to your level. Which level? 0.5, then 0.6, then 0.7, then 0.8, then 0.9. Finally, this is your max limit, because if this is a Wyckoff flow, that means a bullish trend market will be making higher highs and higher lows. If it is making that same thing, then it can retrace from 0.5 level. It can come to the golden level between 0.5 and 0.6. I call this a golden level. Okay, now 0.5 to 0.6, not 0.6463 like that, because I am here having only 10% difference in each of them. Now you can see the magic here. Now if suppose there is a trade here, it retraces and then takes the high, then I am marking here a trade. I am keeping my stop loss strictly at the 10% level. My target is this particular high to be breached. Okay, my target is this particular high to be breached. So what happens is exactly risk to reward is 1:5. Okay, this particular risk to reward is 1:5 when the price reaches the top. Okay, at this particular time what happens is, if you place a trade here, what happens is your risk to reward is 1:5. If the price comes to this level, anywhere, here, inside this area, and then hits the top. So at this particular point, your target is achieved with a risk to reward of 1:5. I hope you all are understanding it. Now, what happens if this stop loss hits? Now, at 0.6, if this stop loss hits, then you have a trade here at 0.6, which is also having 10% of stop loss, but the target is now 1:6. Okay, now what happens? You see the magic. If this particular trade is hit a SL, then this particular trade will get triggered. When the market comes here, this particular SL will hit and this trade will be triggered. Now, as soon as this trade is triggered, your stop loss and take profit are already fixed. So you don't need to worry, all of the things are calculated. Now, if this hits, then price can move anywhere here and then take the top. Once the top is broken, this particular target is getting achieved with a risk to reward of 1:6. Previous was 1:5. This is 1:6. Now, actually, when this hits 1:6, then you have got a profit. I will talk about the profit and the loss percentage and all the things about now, just about in 5 minutes. But now I have to conclude the strategy. Now, this particular trade is good, but what if it hits SL? If it is hitting the stop loss, then again you have to take a trade, and that trade will be triggered at 0.7 level, keeping the stop loss at 0.8 level. So that will keep your risk to reward to 1:7 kind of something. And since the risk to reward is 1:7 kind of something, so what you get is, you get actually a 7 times the profit or 7 times the risk as your reward. Okay, you have earlier got 2 stop losses, so now price has moved to this point. That is why your this trade is getting triggered, because previous both the trades were hitting SL. But if those stop losses were hit and still your this trade is getting to target, that is itself meaning that this trade is the good one, or this level is the good retracement level. Now what happens if this level also fails is you will get another trigger at 0.8% and your target will remain the same at the break of the structure. This particular point will be your target. Okay, the previous structure wherever it is breaking. So now when this particular trade is getting stop loss, then this particular trade will get you in. Now, if this particular trade is getting in, then what happens is you will get 8 times risk to reward. So, previous 3 will be your losses, still you will get this. Now, what happens if this trade also will be getting loss? This is the final attempt, because we are already in the bullish market. That is what we have assumed now. And since we are in a bullish market, what we can assume is that price has to go up without breaking this low. This is actually your key level, which is here. This is your key level, should not be broken. Because if it is a bullish market, it cannot be broken. You already know about this, right? If it is a bullish market, the market has to respect this particular level. It has to not go beyond this low and maintain a higher low and go to the top, break this level. That is how a Wyckoff level is, right? That is what the definition of bullish market is, right? So here I am actually marking you all the things. Now you can understand it. Why this particular strategy is called the best Fib strategy, because you are out of predictions here. You will not be predicting the market anymore. You will just be you will just be having a good strategy point here, understanding to which you have to just mark your fib level to a particular structure wave. In the structure wave, you just need to mind what the retracement is. Now, this retracement is here, you will get your target. Now, whatever happens, see, make this note, okay? Your profit is 5R in all the cases, in any scenario. So you got my point. This is actually a 5R strategy of fib retracement. Why this will be a good one? Because you already know that in fib retracement, whenever you hit a target, the previous will be stop loss. Okay, so if you are targeting 1% per trade, 1% risk per trade, then this is 1%, this is 1%, this is 1%, this is 1%. So in all the scenarios, you will be getting 1% risk, but the profit of yours will be more. So in this trade, the profit is simple 5%. In this one, 6%. It is 6%, but still, because the 1% in earlier trade was lost, so you now get a net profit of 5% only. Similarly, in this particular trade, since the risk to reward is 7% and you are risking only 1%, now in this particular trade, you will hit a target and get 7%, but you will not get a net profit of 7% because 2% you have already lost in both the previous attempts. So net profit total will be 5%. Similarly, in this particular case, since the risk to reward is 8, so 3% will be deducted from 8. That will also contribute a 5%. And still here also it will make total 5% because it is 1:9 and 4% will be your previous deductions because all the 4 will be stop losses and this particular trade will hit a target. Then you will get a profit of 5R in any scenario. So this particular thing is actually a risk to reward 5, 1:5. This particular strategy is actually I'm showing as a risk of 1:5, risk to reward ratio. Now, this is the strategy, this is the point, this is actually the thing that you need to understand about the fibs. And if you want to elaborate more deeper, I will organize another YouTube live which can make your trading a little more excavated towards the profit side. Okay. Now, you don't need to understand everything in trading. You just need to master one thing which you can understand. That is the important thing, right? So, I am here to tell you that this particular trading style is actually a key to success. Why? Because you don't need to actually be predictive here. You are actually focusing on a written particular case where you have observed the risk to reward ratio and everything, and that is actually a very important thing that you have got. Okay, so now I am closing this particular I am actually closing this particular live. But if you want to have any comment or something, you can just tell me. I'm posting all the details into my Telegram channel, so you can actually come and see. Okay. Fib secret is already shared in the Telegram. Okay. Come and join me, and you will get to know more detail and insights of how to trade. And this particular strategy will be beneficial with a very good risk management and a good entry point trigger, how you need to mark your charts. I will be telling you all the things in phase 2. So in this particular live, I will be ending it here. Take care, guys. You can make your comments and make your view. Tell me what you think about everything in what you have seen here. Okay, now I am going to close this and take care.